Well, on to the day's market action now. A late surge helped the Nifty as well as the Sensex end another range-bound trading session, close to 0.5% in the green. Banks led from the front with the Nifty Bank Index ending the day at a record close. That index ended above the 42,200 mark for the first time ever. Mid-caps underperformed, the benchmarks with the index ending the day flat. Meanwhile, the slowdown in global growth has taken a toll on India's exports in October, with exports dropping below the $30 billion mark. Trade deficit, meanwhile, has widened to nearly $27 billion. Lata Venkatesh is joining us now with more details. Lata.
Well, it's a fairly sharp fall in exports. That is the standout part of the data that was declared today. At 29 billion, the exports are, of course, the lowest in this year, but I guess it's lowest in about 2 years. We've been doing over 30 billion for some time now. It's very clear that destination countries are not doing too well, and there was also talk of people having overstocked last Christmas when they were suddenly hit by Omicron. So people are destocking now. That's also accounting for fewer exports compared to usual festival season exports. Imports, meanwhile, have fallen a bit compared to their highs of July and August, when they stood at about 60 billion. It's come at 57 billion almost. That accounts for the fall in crude prices. But it's not a substantial fall, because that still leaves the trade deficit at a fairly high $26.5 billion. The trade deficit up until last year used to average around 15 billion. It has been steadily picking up with the rise in crude prices. But now, in spite of the fall in crude prices from 3-digit figures to about $92, $95, it's still reigning at 26 billion. If you looked at the April-October trade deficit numbers, even after deducting the surplus that we get from services, after all, we are a software exporting powerhouse, even if you deduct that services surplus, we still get a deficit of $98 billion for 7 months, which means the total for the year, adding another 5 months, could be about 170 billion. Even if we deduct from this Indians living abroad and remitting money here, we will still be left with at least a 3% current account deficit. It's a worrisome number. The rupee was below, it was about 80 at the time of the release of the numbers. We did see some depreciation of the rupee to about 81.20 after the numbers were released.
Right, Lata, thanks a lot for that. So some concern there, exports below $30 billion, while the deficit inching a little higher to 27 billion. Meanwhile, government officials believe that they will be approaching the fiscal roadmap with a sense of caution in FY24 amidst an uncertain global environment. Sapna Das is joining us now with the latest. Sapna, tell us, what are you picking up?
Well, exactly what you are pointing out at the moment. So, of course, it's still some time away before FY23 closes. You'll have the budget before that, and all those numbers will be put into perspective. But, just simply speaking, as of now, what is it that the government may be looking at, or, in terms of planning for the next financial year? The budget exercise is very much on, and these are very relevant questions. So what we are given to understand is that, at least from the fiscal side, they are going to be cautious. Even if you look at the current year, you look at the spend trend, despite the additional expenditure coming in, you don't really see a splurge in terms of your other expenses that the government incurs. There is a lot of focus on capex, and that is going to be ring-fenced, as they've said earlier. So basically, the fiscal glide path is the big concern for the government. 6.4 is what it is for this year. They're making every effort to try and stick to that. They're also trying not to borrow additionally in this year, because that could upset that maths. So there are a lot of factors in, surrounding that. So coming year, of course, there's going to be a lot of caution in terms of the fiscal expenditure. Second, as you rightly pointed out, the uncertain global environment, that's going to be a key challenge for the government from many perspectives, not just the fisc or the budget, but also, the trade deficit. We have just seen the export numbers come in, the growth perspective, all of that is going to play a very important role. So as of now, it's a very cautious approach that they're going to have for the next financial year. The question will be that, it's also going to be an election year at some point in time. So what's going to be the fiscal maths like? Well, that's something that we have to wait and watch and see. But as of now, it's a cautious tone. Also, in terms of the current year's expenditure, very quickly, what we are given to understand is that no major surprises expected in the supplementary demands for grants that will be coming up in the winter session of Parliament. We are aware of the fact that there is 1.20 lakh crores additional food subsidy demand that has come in. Also close to around 1.48 lakh odd crores in terms of fertilizer subsidy, additional expenditure. But government is also saying that all these funds, additional funds, will be released as per the expenditure trend, as per the capacity of ministries to spend. So there again, you have a note of caution coming in. It's not that all that money is going to come in one go. So that's what the scenario is as of now. But we'll wait and watch and see how the supplementary demands or grants pans out and what kind of numbers they come up in the RE and also the BE for next year.
Right, Sapna, thanks a lot for that input. So that's a key number there, 4.5%. That's the fiscal glide path